The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman here on the 17th day of October, Tuesday. This is early morning. This is 8:06 a.m. It'll be replayed at 10:06. So whatever I'm telling you now is not applicable to that time frame. If it is, that's just a coincidence because, look, the Dow futures. Now, I had a Chapman wave, a very low reading on the trend gauge yesterday. That's Richard Arm's trend gauge. I just use it for the numbers. And it said that historically, whenever it's been like this, or very low, the very next session, the Dow should probably open lower, go negative, and then attempt to rally. Sometimes, as it did last time, it was way up. It was hundreds of points up in the futures, and intraday it went negative. It's amazing how often this has been very, very accurate. And it's accurate today, but I actually say accurate today up until now. I have to wait for 9:30. This is only applicable to the market open. So we'll see what happens. See, here we go. The Dow futures at this particular point are down about 55 points. Is that 65? You have 65 points. And this is interesting. Look, in the Chapman methodology, we try to identify the lowest low bar and then count each successively higher peak. Alphabetize them sequentially, A, B, C, D, E, F, G, but it's that fourth highest peak, peak D, where other things can happen. Look, there's peak D in the weekly chart, and that was quite a whopper of a turn down from the 36,000 level to where we are now, 34. We've even been down to 33,000. So this is leg C. But the Dow itself and the cash is a little different. Look at the chart. Keep your eye on the left chart. Keep your eye on the left chart. That is different. This is only in leg B, gray leg B. Why is it gray? Because until the stochastic goes to the 80% area, and there are a couple of other things that go with it, I would also need the 9-period moving average to go green, and it's still pink. I call this, it hasn't even given me a buy signal yet. I would have got that today. Well, we'll wait for the end of the day. And that implies that there should be another two higher peaks to go. It should go to at least a D. That's the obligation. I don't see that just yet. Look at the E-mini. So this is the E-mini. This is the continuous contract. But it's 43.87 is the price of the December contract. Well, 43.87 is the continuous contract. this has only gone to a peak A. You see this right here with a high in the futures. This is the E-mini continuous contract. 44.19.00 on the 10th. On the 11th, 44.1975. So that was just a little bit higher. So it continues that extension of the floating letter A, and then the very following bar right here of the 12th of October had a high of 44.30.50, and the next day was a lower high, 44. Right there, 44.07, because it gapped down. So that became a peak A, and as a gray A because the stochastic still only at 75%. Actually, it's doing quite nicely. And in this particular instance, the E-mini at this particular point has seen an L, meaning that the 9-period moving average has actually crossed positive, but the day is young. We'll have to see if that holds all the way through. Look at the NQ, which the NQ is the NDX 100. That is the E-mini NASDAQ 100 continuous contract, got repelled to the Chapman wave inside track repellent zone. Look how many times it's got repelled. It's done the one-to-one to the downside. I haven't done this to the upside. I'll do it right now as we speak and go from there to there. There's a continuation of the Chapman wave falling axe formation. Let's just see if that's going to work right here. We're going to go to that low there. Yeah, I'd missed it by quite a bit. It's up in the 15,500s. and the high just recently was in the 15,400s. So it's got a way to go. And you see there's a falling axe formation here. You see when you get lower highs and much lower lows, and it turns around, tries to make a cup formation. You want to see at least this coming this week. We're only Tuesday. Yeah, this week. You want to see a higher high, possibly in the, I'm talking about the futures now, in the 15,606 area. If you go to the QQQ, which is trading down $1.50 right now, also repelled at the same line, the inside track repellent line, and you've got the declining trend line right there for the falling axe formation. That's an expanding cone. You want to see a push into the, I would say, 375s, and you're at 367. That's about another 8 points up. All right, now I want to go to IWM, the Russell 2000, being very, very poor. It had a nice session yesterday, but it's down 82 cents at 172 pre-market. And now let's go to this, because this is very important. Gold. Gold is up $4, holding fantastically after that huge, almost 60-point spike on Thursday, Friday. Yep, Friday. That's Monday. This is Tuesday. And what we're looking at is the stochastics at 78%. So I don't even though it's a massive move to the upside, and I have to call this at this point gray leg A to the upside, actually gray peak A, gray, because I haven't got any confirmation of a buy signal, let alone a buy mode. So that just says gold has been fantastic in the shorter term over the last 3 days, holding beautifully today. The weekly chart has got a whole lot to improve. It's very, very weak. Price is fantastic, but the actual technicals are still very weak. Why? Because the speed of the technical move on Friday was such that it takes a while for all the technicals to catch up. And so it's forming just right here. Let me just draw this in here. So far, it's making lower highs right there. And we could even call it a little flag pattern right there. All right. So that's a little triangle pattern. We'll see what happens. If gold at any point in the next few days gets to 1951, then that 1956 200-period exponential moving average, which has been a magnet line and a repellent line for so long, starts to attract the price, and then we'll have to see what happens after that. With the conflagration in the Middle East, you almost always get gold having a good run. Let's go to silver. Silver itself, this is Basil Chapman. This is the early edition of the Tiger Technicians Hour. My service is the opening call and daily service. Okay, and what we're looking at here is that within the context of, let me just get to it, in the context of this declining trend line, and actually it's almost the same flag pattern that I was talking about a moment ago. Let's just pull this back. There it goes. See, there's a flag pattern. That's an expanding cone, declining, expanding cone, just too many words. But that's what it is. If silver can start to trade into 23.23, right now it's up 11 cents at 22.88, but this is a continuous contract. If it's able to, I'm not going to say just push once, it needs to hold in the 23s, and then you've got 23.62, it's a 200-period moving average, fantastic resistance and a magnet line. If it gets there, I think this time it will actually push above it. Watching it very closely. What am I missing? I'm missing crude oil. Crude oil right now is up 22 cents at 86.89. Yeah, so this has got the pink 9-period moving average. To get it green again, you probably have to see 89 in the crude oil. It's at 86.89 right now. I'll be back in a moment. Basil Chapman, early edition of the Tiger Technicians Hour. Will be repeated at 10.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kegstad's Tiger Forex Report. Teddy Kegstad breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Are you ready to take your trading to the next level? Introducing Tom O'Brien's award-winning newsletter, Market Insights, your key to successful active trading. Tom O'Brien, renowned for his expertise in the financial markets, has designed Market Insights to be your daily guide to profitable trades. Tom publishes his daily Market Insights newsletter every market day before the market open, along with updates when warranted. Stay ahead of the game with Tom's real-time analysis and trade recommendations delivered straight to your inbox. Whether you're a seasoned trader or just starting out, Market Insights provides the edge you need to navigate the markets with confidence. Ready to join the ranks of successful traders? Head over to TFNN.com and subscribe to Market Insights today. Don't miss out on this opportunity to supercharge your trading results. Market Insights comes with a 30-day money-back guarantee for all new subscribers, so you have nothing to risk. Don't miss out on this opportunity to revolutionize your trading game. Head over to TFNN.com right now to join the thousands of traders who have already experienced the power of Tom O'Brien's award-winning newsletter, Market Insights, firsthand. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi, folks. Basil Chapman. Early edition was 8:18 a.m. in the morning. It'll be 10:18 when it's replayed in my usual time slot. We've got the bonds down 22.30 seconds at 110.21 seconds. Wow, this does not look good at all. If you look at the TBT, which is the, the TBT, where did I type that? Oh, I typed it into the den by mistake. TBT. TBT made a peak E in the Chapman wave around in the 43s the other day. Not the other day, it was about 8 sessions ago. And trading right now at 41.05, up 90 cents. That's 41.95. What we're looking at here is if you're looking at the 9-period exponential moving average, it is so far above the black 14-period moving average that to get it negative, you'd have to see $37.80, $38, somewhere around there in the TBT. And that would equate to the to bonds, to the TLT itself, which is trading down 72 cents at 85.48, pushing into this gap into the, I'd say, up into the 80, 88.50, and then the 90 area to try to get into the gap above 90. Wow, that's going to take quite a lot. This is just telling us that yields are determinately staying in the higher range. Look, here's the TNX. The TNX is trading at 47.12, 4.712. The most recent high was on the 6th of October at 48.87, 4.8. This is really something. You would have expected on this pullback that at about now you'd be traveling into the 45, 44 area. Instead, we're at 47.65. And that means that yields are still high. And if you look at the dollar HGX, here we go. This is the Philadelphia Housing Index, Housing Sector Index, made a trough F, had a nice rally, and now it's pulling back to where? The 200-period exponential moving average. Did it even need the 200-period moving average? No, not since it was there and broke out to the upside in the same kind of pattern back in May of last year, March, end of March, beginning of April, going into March, April. Look at this, 200-period moving average. And look at that beautiful rally all the way from the 420s to the 575 level. That was a peak D. And then we went rectangle, cup formation. That's usually a sign that you're going to be breaking down. You broke down. And now we're back at the 200-period moving average, this time tagging it. Before we didn't even touch it. Now we're tagging. Now it's like a magnet. And that just says that the Philadelphia housing sector index is stalling. I don't know how else to put it. And the other thing that we're looking at here is if you go to Toll Brothers, look, Toll Brothers, sharply lower, trading at 71.76, up 9 cents pre-market. This is not good. It was up in the 80, let's see, we had shorted it at 81.5, and then it pulled back, but we got stopped out, and then it went even higher. So it went to 83.72, pulls back, and then had this, it's not really a rogue wave. It's almost like a right arm extension that went to this peak E on the 1st of September at 84.57. I should put that in, 84.57 on 9/1/23. And that's red. Yeah, and here we are, Toll Brothers down to 71 area. Doesn't sound like a lot, but believe me, we haven't been there since the spring of this year. Got to be taking that into consideration. High-grade copper. Look at this, high-grade copper, HG. High-grade copper is a decided down move. It is got that Fibonacci expansion, has taken it out. I'm not interested at all in that. I'm interested in the 9-period moving average, sharply under the 14-period moving average. The MACD's weak. The stochastics at 13%, very weak. On balance volumes very, very close to a little bit of a bounce, but not yet. And there's the H pattern, the dreaded H pattern. It's taken out that left side low. This is the second week. Maybe you give it one more week. Let's see in the continuous contract if it should be sacrosanct 3.599, the low the week of the 26th of May. Here we're at 3.553, 599. Yeah, it's a long way to go. So that should not be taken out. We'll see if it is. Let's go on to. Okay, so now what I want you to do, I wrote down a whole bunch of things. So I want you to show you something. I had a question about it, something that I liked very much. I'd been asked about it. I don't know why I didn't get it for subscribers to my opening call. I did like it a lot. Amgen is trading down. It's trading at 286.88, unchanged. It made a peak D yesterday in the Chapman wave methodology in the daily. It's in a leg D in the weekly. And this monthly chart, look at this huge arch formation. Cup formation, makes a second cup formation right here. And this cup formation, let me just put this in so that you can see what I'm talking about, right here. And this second one has a strong candle for mid-month. It's exactly mid-month. So let's see where it finishes, because it could be just a tag above the high of November 2022, that's all-time high of 296.67. And it's trading right now at 286. So it's got 10 points to go. Yeah, it's a lot to get to in this environment in a month. In 2 weeks. Well, we'll see. So ES looks like a bull flag so far. In that case, we should slowly head back above 4,400 and towards 4,445. All right, let's just have a look at this E-mini, since this is now just before some kind of news at 8:30. Maybe we get some economic news. Here we go. Look at this. So in the Chapman wave methodology, you're always looking for a buy signal to be upgraded to a buy mode, and then you should get a D, at least 4 higher peaks going to a D. Well, you got your D, doji candle, 11 o'clock. Look at this. Yesterday, the 16th, at 11:10, that was at 11:10, and you suddenly had the sharp pullback, and then you had a rally, and that created a declining trend line, which is in a rectangle. And remember, I always say a long rectangle formation. This happens to be slightly declining. I'd say it's declining at about 4 degrees maybe 5 degrees. But it is a channel, and I drew this in much earlier. And look at this. We're right in the bottom part of the channel. This is where I usually go make this. Oops, I didn't mean to extend it. Don't extend it. Take that off. Yes, yesterday, that was interesting. Yesterday, I had this terrible experience. I thought I had lost. It happens every once in a while where I'm typing on the chart, and not all the charts, just a particular chart, and suddenly the notation disappears. And it happens, I haven't even figured out what it is over the years, how it happens often enough for me to say, oh, wow. I said, then it was happening on every single chart. And then I called TradeStation, and they were very helpful, and we went through a whole bunch of things. And then I had to do my show. So I went off, and I would call him after my show, called a different guy, and I'm doing this stuff, and then I suddenly said to myself, oh my goodness, I had a black background chart, and I changed it to white for the lettering. And I forgot, that's why I couldn't see any of the letters. And while I'm talking to him, I go and I say color, and yep, lo and behold, it's white. So I changed it to blue, and then I said to him, well, you know, I think it's resolved itself. Thank you so much for all your help. I was embarrassed to tell him that I had made a dumb mistake.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com. TFNN has just launched their new trading room, the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablet as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
Hi folks, so we just had some kind of a news. I have no clue what it is. Economic news, the market was trading down about 11 or 12, and now it's down 19. And I just typed into the den. Looks like the market is in this watch and wait phase, dartfish day. Quick, sharp moves that then stall and reverse course. repeat and wash over and over again until mid-afternoon. So we'll see what happens here, because we've gone down. Remember, I drew this line in. I had no idea what was coming up, but I drew the line in because that's what we always do with these patterns. Long rectangle pattern, it is actually a declining long rectangle. It went down to the inside track red support line, went under it. This is a 10-minute bar. Let's see if it closes below it or if it goes back, and then it goes into this new trading range with a limit on the upside of 43.90, which is the 200-period exponential moving average magnet line and repellent line until it becomes a propellant line. So we'll see. Let's just watch that. Meantime, back at the ranch, I didn't finish some of the things I wanted to look at here, and I wanted to show you something very interesting. Look, Amgen's holding very well. Within that category, you've got Pfizer. So Amgen is a biopharma, but Pfizer is a pharma itself. But it's in PFE. Why did I? Oh no! I don't know how many. You can imagine Pfizer's been around forever. So if I had charts that actually kept the notation, never lost the notation from the day I saw Pfizer. I've got Pfizer from the day that from its very opening price. I don't have it anymore. But I'll just do this real quickly. So this is, look, all I do is I identify the lowest low bar. I go peak A by 1 penny. If it goes above that, that starts leg B, becomes a peak B. If there's a lower high, then it goes to a C, then it goes to a D, and then it goes to an E. So Pfizer, look at this. Just every month for the last almost the entire year has just been making slightly lower highs and slightly lower lows in this little narrow channel after having big, wide price movement. So what's fascinating to me is how the different, look at this. Yes, Merck, also in the pharmaceutical area, had a beautiful move. Let's see. So Pfizer went to a peak. What did I have that as a peak E? Yep, a peak E. The fifth highest peak. Merck went to a peak F. That's the sixth highest peak right there. Peak F, and it's pulling back, but it's a way better chart formation than Pfizer. And look, it's gone to a peak A and the leg B. It's called the leg B. If there's no new high today, it becomes a peak B. So I'm looking at these, and a lot of people ask me, because there was a long period where people were wanting to be in biotech. I think that biotech, what is bio? Bio is Bio-Rad Labs. All right, well, we're not interested in that one. IBB is what I wanted. IBB made a peak F, sixth highest peak, back in 2021. And look at it right now. It's in this arch formation. So they're all having slightly different patterns, but they're really not in favor at this particular point. That's really what I wanted to say. We've had this rotation through all these different sectors. Eli Lilly's been the favored one because they've got some fantastic drugs. Trading right now at 617.01, up 37 cents. So this is what I wanted to show you. I'd written down a couple of things just as points of note. And let me just go through them here. Oh, back in the 1930s, I think it was, the 30s or 40s, when when television started to become quite popular, there was a company that designed the television so that it had X number of lines. These are the horizontal lines across that gave you the parameters for the picture to be clearer or not clearer. There was another company, and I can't remember, I think RCA was the one, and I think it was the American Broadcast Corporation or National Board. I don't remember. There was another company, and it turned out that the other company had 13 lines or something, 11 lines, way superior. But the other company had the money. They had the bucks, and they pushed and pushed, and they became the company that it took until the 1970s before America, the television quality actually caught up with Europe, because Europe did the other one a little later on, and was far superior. Now, I'm wondering, aren't we seeing the same thing here? Because you've got batteries for the EVs, electric vehicles, but you've also got hydrogen fuel from, was it Toyota that took some time, or Honda? Honda, I think, had, and then I think they've dropped it now with hydrogen fuel. Is it going to be the same thing? that the best company is not going to win, the best product or the best design is not going to win because money is going into something else. I'm just throwing that out here because these things happen, and the financial aspect is the one that often is the one that wins in the end. It doesn't make it better. It just makes it the winner because it's got the big bucks. So it's going to be very interesting, isn't it? So Eli Lilly looks fantastic. And I said the other day, if you're interested, just start a position here. But risk reward says to me that at some point it's coming back into the 560, 550 area. But in the shorter term, a lot of fund managers are going to say, hey, this is looking good. I'm in. So what I wanted to show you is, remember I said that there could be a repellent line. So the E-mini ran a little bit after the sharp move down. The sharp move down, Chapman Roman candle, not quite. It just missed it by being less than half of the body is a little bit too big. Should have been just a little less. But now, if it starts to trade halfway into the wick, it's the same principle. If it trades into the 43.83 area, and it can do this as a 1 minute chart for about another couple of minutes, there's a real good chance we're going to test the low that was made at 43.81.25. So this is not good. And now we start to test this declining trend line right there. And we're under it. And it's making that whole area to the upside really strong resistance. That's why I said to my subscribers this morning, we're not adding anything. We're going to not subtract anything. We're just going to monitor our positions very closely. We've had some really nice short-term gains in our rather aggressive long positions, and that's all I can do. And the other thing is that we've mostly raised stops in our new positions, and we're just going to have to let them play out and see what happens. So let me get back to our story over here, and I wanted to show you this. So the question also came in, the GDX. And look at GDX. This is the gold miners. It's unchanged at 29 right now. This is a single leg A up. In other words, as it turned around, this bar here was gray A, and it's a floating netter. This one is gray A and made a higher high the next day. So this is a gray A, made a higher high, gray A, higher high, higher high, higher high, and yesterday a higher high. So if it goes above 29.19, if it goes to 29.20, that'll extend gray leg A again. But the stochastic's at 76%. What if in the single leg it goes to 80% or higher? Well, in a single leg A, I still have to say I've got to be careful. It's a fantastic move, but there's a chance that I'm going to say I have no choice but to call this a buy signal and put an up arrow there. It can fail like this, went to the 200-period moving average at peak C and then came down. And the 9-period moving average went green. But look how only briefly did the stochastic go above 80%, and then it turned down. And that's never good. So we're going to be watching this very closely. On balance volume is a tad overbought in the daily chart of GDX, holding really well at this particular point. I'll be back. This is 8:38 a.m. in the morning.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Hi, folks. I was saying in Dartfish Day, look at this sudden sharp move down, and then it stalls, then it moves up a little bit, down a little bit. So it's just kind of stuck. It's not really breaking down 17, I guess, in the den. Let's see. I guess the story is that there was, where did I see? Did I see that at all? I thought I saw something that said sales numbers or inflation numbers. All right, I didn't see it. I'm not sure what it is. I should. Oh, yeah, I thought I saw something that said that there were higher retail. Okay, retail numbers were strong. All right. Talking about retail numbers, wife and I were at a mall on Saturday, was it? Sunday? One of those days. And had to get something, gift for someone. And we're just looking around. I have to tell you, the parking lot was just full. And I always gauge, I wore a suit recently, and in the pocket was the actual price of the suit, the label and stuff. I guess I put it there. I got it back in the just after 9/11. You remember when everything shut down, and the stores had these incredible sales, and we had was a Bloomingdale's or one of those had incredible sales. And I remember I got 3 suits or something like, I can't remember, 3 suits. I don't believe I paid more than $300 for these absolutely fantastic suits. And then in the pocket, it had the price. It was $660 for the suit. Well, in my life, I've never even considered that I would spend $660 for a suit. So that was the price. And I got 3 of these things for, I don't remember, I think it was less than 300. Those are sales, right? Well, I've not seen anything like this. None of the stores had, so they'd have a little counter, a little section that said 20% off or 30% or 10%. There were no real sales. So people are shopping. So this is going to be very interesting how this resolves. So, and I do believe it's going to resolve. And I still see, so the question came in, as a subscriber, we have no brand new long positions in the diamonds. No, we don't, but we do have in the 3 times long, and we do have in the 3 times long in the Qs, just as trades. And we've taken nice gains off these in the move up, because I wanted short term to put the least amount of money to work for the most amount of potential on the upside. And I'm anticipating it's going to be stopped out at some point very soon. And I think, and this, let me just go to this. So I'm showing you the gold chart. Gold's holding really well. And I'm a little surprised because I'm sure that the Biden trip is to kind of delay everything in terms of just the real bombardment that we're anticipating. So we'll see what happens there. Now, in the meantime, back at the ranch, what I want you to say is, look, here's the RTH. This is the retail index. RTH is the VanEck retail ETF. 20% is Amazon. And look, it went underneath this rising trend line. It came under it. The weekly chart is around okay, but it's kind of stalling. And the daily chart is pulled back. Look at the XRT. Now, this has equal weight as Amazon is only a part of it, right? It doesn't distort it. And this is more accurate. And it says it's been very, very weak. So I'm going back to my story here, is that the sales, they just not, normally when things are starting to slow down, you'll see stores saying 30% of everything or whatever it is, but really decent sales, I like good sales. There weren't any. And that just says to me, we aren't in that phase. So let me just go back to the market here, because I believe that this move up is okay, but it's not great. Look how it's stalled at the 200-period moving average in the Dow. Look at the S&P. This is the daily chart. Look at the S&P on the left. Today, or yesterday at the close, the 9-period moving average flipped positive. So if it can go even a penny above AB, even if it can go to 43.86 at this particular point, and that's not terribly far away from where we are, where we closed yesterday, but it's quite a bit from where we are right now in the E-mini. Look at that, big red candle. So I think this is really tough. And if you look at the weekly chart, the 9-period moving average went under the 14. To me, that is a sign to say that the technicals are starting to deteriorate, and a lot of work needs to be done to get back to green. It isn't a serious decline. Let me see if I've got the chart up. Yes, I do. Look, here's the S&P weekly chart. Let's go to the S&P, SPX.X. There it is. And it's just, look, it's very narrow. It's, in fact, if the S&P had to climb to the 4390s, I think it would go back to green. And that would be quite positive, but it hasn't yet. And this is just telling me, and if you go to the QQQ, right now, let me actually go to the futures, NQ. Yeah, you can see there's green. It's deflected back up again. Price has gone up. It's down 108 right now at 15.190, but this is real time. So it's still holding pretty well. So that's what I'm saying. I think that there's still going to be time. So a question came in about Myrna. This is why we're talking about biotech. Myrna is down 81 cents today at 91.13 and had a very ugly candle yesterday. And I've been saying for quite some time, if you've done your homework and you really think that they have a product line that is going to really be in the front line, not in the background, but in the front line. I mean, where people are recognizing that they have the COVID, fantastic, runs up to 497 back in August of 2021. Well, it's got a little problem. It's at 91 right now. I would call that a 400-point or more decline, and that's pretty serious. So I've been saying, I just don't see, I would wait. If you're looking at long-term, maybe you can get a long-term option. And this is just confirming for me that their sweet spot is just not around at this particular point. I think it will be. I don't think it's a bad company. I think it's an excellent company. From everything I've heard, there are other people that do a lot of work in this area, so they're talking with knowledge. I'm just talking about chart patterns. And the chart pattern is just saying that Moderna has something's not right. That's all. So I'd be real careful if you are long. Absolutely. If it's a very long-term position, even then, I'm going to say to you, take a little bit off. You can always put it back. I'd rather be buying higher prices, higher highs and higher lows than lower highs and lower lows. It's just not a great pattern. And I'd said before, this arch formation looks to me very much like it wants to make a second arch. And if it takes out the left side low of 95.02, that's going to be a real problem. What it's trading right now, 91.13. So yes, it has taken out that low. So just be really careful. So really strong retail and core retail numbers. Yeah, I don't. If you're thinking being a Fed, it just means that you follow a couple of indicators, or you stick to a plan. The Fed is really behind the 8 ball here. It's really tough because if you're looking at the yields, look at this. Here's the TNX again. Look at this. There's the TNX trading up 84.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Are you ready to take your trading to the next level? Introducing Tom O'Brien's award-winning newsletter, Market Insights, your key to successful active trading. Tom O'Brien, renowned for his expertise in the financial markets, has designed Market Insights to be your daily guide to profitable trades. Tom publishes his daily Market Insights newsletter every market day before the market open, along with updates when warranted. Stay ahead of the game with Tom's real-time analysis and trade recommendations delivered straight to your inbox. Whether you're a seasoned trader or just starting out, Market Insights provides the edge you need to navigate the markets with confidence. Ready to join the ranks of successful traders? Head over to TFNN.com and subscribe to Market Insights today. Don't miss out on this opportunity to supercharge your trading results. Market Insights comes with a 30-day money-back guarantee for all new subscribers, so you have nothing to risk. Don't miss out on this opportunity to revolutionize your trading game. Head over to TFNN.com right now to join the thousands of traders who have already experienced the power of Tom O'Brien's award-winning newsletter, Market Insights, firsthand. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
So let me just show you. I said Dartfish Day, meaning that there's a sudden move, and it looks like this is the move, and then it stalls, and then reverses, and then it does it again. But this is the 1 minute chart shows that it keeps filling in the low, from the low. It tries to rally, and then it keeps coming down and taking out the low. Then it does it again. Then it does it again. So as long as this line is pink in the 10-minute chart, it says this is negative action. As soon as it turns green, it says great. So the real big issue here is 43.90 is the 10-minute, and 43.93 is the 5-minute 200-period exponential moving average. Those are going to be the barriers to overcome today. If there's any turnaround to the upside, it's going to be a big deal if we can close above that any hour of the day today going into the close. But on the downside, because of the moves that we've had to the upside in this particular environment, this warfare environment, that just says you've got to be very careful. And I've made it a rule for us, for my subscribers to my opening call. We've got a cash position. We want the cash position, but we've got trading positions as well. And that's the way I'm looking at it. Just got to be a little careful. It's not a big deal. We're only down 95 in the futures and the down. This is pre-market. This is at 8:55. You're going to be handing it over to Tommy Jr. Tommy's got a great show. This is the morning market kickoff coming up. And if the repeat program is at 10 o'clock, then I'll be handing it over to Steve Rhodes. A great programming here at TFNN. But in the meantime, back at the ranch, as we get into 1:30 to 2:15 this afternoon, if the Dow is more than 60 points lower, that's not a good sign for the close. It's going to be a weak close. If there's a nice comeback, for whatever it is, who knows? And the Dow at some point starts to be minus 40, the minus 30, and actually goes positive. I think that'll be a good sign to say, wow, resilient market. But I think you've got to be very careful at this particular point and very selective. So I didn't go through a bunch of things that I'd written down that I wanted to do, which would include Apple, etc. But some of them have held quite well lately. Just watch them closely. This is going to be, I think it's going to be a difficult session. Not because it's really sharply low, but because it's just not holding